Hello, hello, hello. Happy Wednesday, everyone. How's everyone doing today? Good morning, John. Good morning, Mark. Good morning, Martinez. Good morning, Sterling. What else we got going? Oh, hold on. I missed a clicky. There we go. All right. Good morning, Patrick. Where else? Sterling putting in some news about Russia and Ukraine. Good morning, Heinrich. Secretary of State Rubio, the U.S. won't abandon its position on Taiwan. Well, that's probably good news because Taiwan should be independent. Good morning, Jake. Good morning, Tony. But China doesn't agree. Thanks for putting in the earnings again. We have Lowe's this morning, which was a beat. A lot of beats today. Advanced Auto Parts beat. Anheuser-Busch beat. TJ Maxx beat. Remember, these are dialed down earnings expectations, so. But Lowe's was sort of interesting, although Lowe's guided flat for the next year. Lowe's guidance was not great, guiding flat. Slight gap up on that. Intuit, beat. What else? Some of these we don't need to. You got to. If you don't know about Jack in the Box, missing on that revenue, people cutting back on the fast food. What else do we have? Yesterday afternoon, you have AMC, which was a miss on EPS, beat on earnings. Nothing that I would touch, though. David, good morning. Jacob, good morning. Hello, Charles. All right. More and more people filter in. Relatively quiet day today. But after the close, the fireworks will begin. So today, with the mortgage stuff come out, we've got Barkin speaking. We got new home sales numbers. We got EIA numbers. We got Bostic speaking, and that's it. But the big thing today is NVDA earnings. Yesterday, market, we had a sell-off and then a bounce back. We hit in that buying pressure zone, but the consumer confidence dropping and these sub numbers with the inflation expectations mirrored what we saw last week. So now the bond market is not buying it so far because the 10-year yield keeps dropping. So one thing's going to be right, one thing's going to be wrong. Tomorrow morning, remember, we have our PCE from the GDP numbers, the quarterly PCE numbers tomorrow morning before the open in durable goods. So far, people buying up the chips ahead of NVIDIA earnings, counting on NVIDIA, people buying up Salesforce. Salesforce also reports this afternoon. So that's where we got people buying up the software and the semis. Other than that, mega caps, after taking a slight beating yesterday, are attempting a bounce back. We are in oversold conditions for a lot of things. Good morning, Bull Stripe Cheetah. Good morning, McRangers. So we are in oversold. I would not be surprised to see a bounce. Is there a super strong setup? Not from my perspective, but I'm watching yesterday's highs. Yesterday's highs are key. Consumer cycle, pretty much everything positive except consumer defensive and healthcare. Everything else positive. Consumer cyclical, technology really leading stuff higher today. Fed watch. Now we have the first cut in June. Market's getting really dovish. Contrary to what the Fed speakers have been saying, the markets are now back to pricing in 2, starting in June. I think the market's starting to price now taking a recession seriously. And we're back in extreme fear, so I start watching for any bounce plays, but this bounce will determine really the next possibly 2 to 3 weeks. Schiller PE 37.53. We already went through that, and NVIDIA, Snowflake, and Salesforce are the biggies this afternoon with everything with eyes on NVIDIA. Reminder, it releases at 4:20 Eastern Time. So if you want to see what's going on, tune in at 4:20 Eastern Time. Not to me. I won't be live streaming, but tune into the markets and see what's going on. Tomorrow morning, really the rest of the week, we don't have much. So tomorrow morning, you're going to be paying attention to GDP, PCE, and durable goods because earnings are nothing that's going to move the market. Tomorrow after the close, nothing that's going to move the market. Probably the biggest name is Dell, and that's really not going to move the markets. And then not much on Friday at all. Okay, so S&P, bigger picture. You see here on these a lot of dip days. Now this is getting lower and lower dips, but they are still getting bought in this window, dipping below the 62.5 briefly yesterday, and then bouncing back. But you know what? If this area finally breaks with any momentum, watch out. Overhead, let's see what levels we're looking at again. If we roll over, I'll be watching for a stronger bottoming pattern on any rally today. 60.15, then 60.28 are the first two key levels. Yesterday's high on any follow through is the 60.16 level. So that's going to be the first target area I'm looking at, and also significant area based off this gap open from Friday, February 10th. Above there, though, we have 60.28, and then you're running into all the key moving averages right around 60.45 to 60.50 on any sustained bounce. So good morning, Daniel. What is... It could create some very significant downwards pressures on growth. I agree, because it's been dependent on government spending. To the downside. Let's do to the downside. Remember, analyze both sides of the markets. Even though I'm looking now for the bounce, we haven't been able to sustain anything besides yesterday's dip buying. So, right now, again, if we make a new high going into, like after the open, I'll ratchet these levels up. But the key levels I'm watching are any pullbacks are about 59.80. And then my very key is 59.64. We start dropping below that, I'm going to be watching for more of a potential double bottom. Although we need at least a 1 hour close below about 59.54 to start getting in that area. So those are the key things I'm watching on any pullback. Now also remember, I don't want temporary drawing. We hit oversold yesterday on the short-term RSI. We've got cycles at the bottom now on the daily. So, and technically, if we did close above yesterday's high, it is a %B buy. So, for a short-term bounce. NASDAQ, we got cycles at the bottom. We hit oversold yesterday. We did close below 62.5 NASDAQ, so again, we still should see some more downward pressure, but we could easily bounce first. Easily bounce first. The magnet price, though, for the next little bit is 20,902, 20,900. On any bounce, if we start trading above this 21,325 area and can sustain something above there, the next key area I'm watching is 21,465 to 21,500 as the key resistance zone. Yes, technically, if a NASDAQ did a rip your face off rally, it would have to close above yesterday's high for a %B buy, which is a long way off. Intraday, the key support, the key levels I'll be looking at if we roll over on into the open. The key things I'm going to look at is 21,161, then on a 1 hour closing basis, 21,118. We closed below 21,118. I'll watch for the potential pullback to retest yesterday's low areas and possibly set up a double bottom. We'll see. Dow had yesterday a little double that never confirmed or triggered, turning into a triple. Into a clear path move. So if you start taking out this high area of 43,850, then my target is 44,119 area, 44,100 to 44,119. To the downside, very strong support just below 43,480. Russell making a new recent low yesterday. Then we got some buying pressure coming in, but I'm still watching. Coming down to a very key significant level, but we can still, on any bounce on the Russell, still watching for rollover plays, especially to the 50% harmonic and the final target of the double. Very key resistance at 2196 right now. VIX, if we start dropping below 19 on the open and can sustain that, I'll watch for a more sustained bounce. DAX rotating up, secondary reaction, easily closing above the 62.5, putting it in potential double top territory, but the trend is still up. So this is a great area from my perspective to trail a stop now on the DAX. That would be on a closing basis below 22,171 triggers the double. Also remember, we are very overextended from the rotation zone. But the trend is still up. We had the percent B buy on Monday, sort of tried to get traction yesterday, but could not, and then today following through, putting in a double top territory. If the DAX does break out against the recent high formed at the harmonic, then 23,225 and then 23,450 are the next key harmonics up. By the way, to invalidate the double, just so everybody knows, and look at this really nice cluster here. You see this cluster. So this 23,225 area, get there, it invalidates the double. It takes it off the table. And you have a really strong cluster right there. Really nice things lining up in the DAX for the harmonic levels. The notes, well, closing above the 62.5, getting to right to the 75. So we still could see some upward pressure on there. The key pullback support now is 109.30. 1 to 109.24 on any pullback. The next magnet price is 111.02, right in the vicinity of the 200 simple. In terms of a yield basis, channeling back down the yield, but if those note futures keep rising, then we could easily see a return to the lows in the yields from the beginning of December and around this 4.2 area. On any bounce, key resistance 4.42. We'll take a look at URA, Ken. Ted, good morning. They have canceled, but it's not just a data center play, URA. Now, why don't we just jump there right now to do that for Ken? We've nearly hit the final target, so now take a look on the weekly. We're against the weekly 200. This is where I will start looking for a bottoming pattern. The only thing right now, an aggressive buy would be on a break above yesterday's high with a follow-through close. But that is not a long-term bottoming pattern just yet. That's for a short-term bounce. Why is it a short-term bounce? You see here, you just ratchet that level down a little. You have the declining rotation zone. So generally we'll get a first reaction, then a rollover play, and I'll start watching for a stronger level. We have cycles at the bottom, so would not be surprised to see a bounce here. But if you're trying to play a bounce here, it is a bounce play. It would then have to sustain and get above this 26.75 to 27 area to start building a solider base back above key resistance. Other than that, it could see a bounce and then trying to form a stronger bottom. Remember, this was an example before. Look at this on the weekly. Back, see how it bounced, rolled back down, formed a stronger bottom, and then it took off. Okay? So this is coming into a very key support area, but we only have a potential minor bottom so far. And it has not even triggered yet. It might not trigger today. So if you're trading this as a long-term bottom, you got to be nimble with it. It's not just something to back up the truck, buy something, and walk away from. It's something that has to be managed, because we could easily come down and retest this key area again. And remember, we still have the 87.5 price target just below that. So we could bounce, come back down here, form a stronger bottom. So I want you to manage that appropriately. Dollar index. Dollar index. We do have a little minor 4-hour double bottom. That's for a bounce, potential bounce play only, especially to the second target. That's a bounce play only, and that might not trigger because it's going against the daily rotation zone. So remember, it doesn't even have to get to all the targets. And the top of the rotation zone is in front of that second target. So I might revise that, say, the first target. So that would have to be nimble. I don't know if you could get reward to risk. That's the only thing I'm keeping an eye on for a bounce pattern. Again, see, this is another example of a short-term potential pattern, not even a daily potential pattern. Crude, still no close below 62.5, still in the potential reversal window, but no fantastic setup just yet. I'm going to be watching today to see how this closes with the EIA numbers coming out. Remember, if we close below 68.30, we shift it for continued down move. There is no long-term buying pattern or even medium-term buying pattern in this. Going into the EIA numbers, there is a little mini potential double bottom. Again, you gotta keep things in mind with the time frames. See, this could just take it back to the prior breakdown level. Okay? The prior breakdown level just in front of the third target. And you see here, it wouldn't even regain major support. So that would be a bounce play only, which would probably have to be done. If that triggers, it's probably going to be on an intra-bar move, a shorter term move like a 15-minute with the EIA numbers coming out. So don't mix up time frames. That could be a bounce play only, not a sustained buying pattern just yet. Gold, lots of selling yesterday with the markets. Minor bouncing here. The thing I'm still watching, if gold closes below the daily rotation zone, takes me into neutral in the short term. Okay, we're working off overbought conditions. Remember, we were stair-stepping down with divergences, and we have downward pressure for the cycles, and weeklies are finally rolling over. And if we start closing below that daily rotation zone, I'll start watching for a reconnection with the weekly rotation zone. After a huge number of run-up weeks, this does not surprise me and does not change anything with the long-term position in gold. Silver has not been able to sustain anything. Failed to break out there, but not invalidating the potentially higher for longer price. That level, the level, if you're still a silver bull, has not been able, has not been able to sustain anything yet. The invalidation price, if it closes back, but just remember 31. 31, you don't want to see a close below silver for 31 if you're in short-term bullish there. Copper, also going to be watching for a more significant topping pattern here. This is now. Remember, we ran up. Now we're starting to pull back. So if we get a more significant topping pattern here in copper, then I'm really going to be focusing. I think the market's starting to trade off those recession coming in. Finally trading off that. The yen. Here's another little example, just a little mini 4-hour double bottom, not triggered or confirmed yet. That would be for a bounce play only against the rotation zone, not a long-term bottom. Yen trying to build a stronger base in here, but nothing yet. Bitcoin real quick. So, Bitcoin triggering yesterday the double on a daily basis. This is though a weekly pattern I needed to follow through on a weekly basis. So on any rallies now, I'm watching for rollover plays. The key area I'm looking for is on any bounce is 91,700 to about 93,400. 93,400 to 91,700 for on any bounce play. We are an oversold. We're getting the daily cycles at the bottom. I need to see this follow through on this week, though, to really trigger that pattern. So what else do we have? Spiders. Spiders coming down yesterday, straight that 62.5 and bouncing. On any rollover, your first key area is 594.24, yesterday's close. And then yesterday's low is very, very key. If you're looking for an intermediate level, that's where I'd use the little harmonics like this. And keep an eye on between 593.12 and 592.23. No, I don't want to add text. I want to delete it. Oh, boy. There we go. On any rally up, I'm paying attention. The first key level is 597.90 to 5, and then 599.20 are the key levels, the upside. The Qs closing below the 62.5. So again, shifting the probabilities for lower after any bounces. If we roll over in the open, 513.32, and then your major support is 509.98. The magnet price is now shifted to 504.84. The rally price, I'm still watching yesterday's high area. right around 519.30, and you have a gap fill technically back to 519.87. Rallies, unless NVIDIA blows out the Qs and the NASDAQ go on a rip your face off rally, I'll be watching for rollover plays over the next few days. Now, PCE numbers on Friday could throw a glitch in the matrix. Tesla, trading at the bottom of a channel line, going to be watching for at least some kind of little short-term support here with daily cycles getting the bottom before the next rollover play. The double that was here that never triggered or confirmed is invalidated now, so there's no fantastic bullish setup on Tesla. Anything else, I'd be watching, especially the key 4-hour rotation zone and the prior breakdown level at 325 on any sustained rally. NVIDIA going into earnings, trading right at its 200. In order to regain support, it's got to get back above this 129.50 after and sustain that after earnings. There is a percent B buy on a follow-through close going into earnings above yesterday's high. A potential, I should say. The high is 130.20. So we'll have to see. Very risky play for Mike because you have the gamble of earnings. But technically, that's the setup. Hey, good morning, Royal Palms. So, and other things rallying, like a little gap up in Broadcom. Again, a lot of chips trading in sympathy by the chips headed into earnings. But a lot of these things have begotten oversold conditions. So would not be surprised to see a dip, bounce. However, it's all going to be dependent on earnings. Yet NASDAQ. Amazon yesterday, still going to be watching for this to reconnect with the 200 and the bottom of the wedge pattern. But buying pressure in here, oversold. If it does follow through above yesterday's high with a key close, it is a confirmed percent B buy. But you have major overhead resistance at 27.75 and then going into the rotation zone at about 21.75, then at 220. Could you use the second target on the weekly potential double top in GTLB? Hold on, let me take off that. The weekly double on GTLB. Yes. Let's see. 41.58. What's the close here? 41.70. Technically, no, Sterling, you can't. Technically, no. So I would not trade that as a double. What I'd be looking for here with GTLB, with GitLab, I'd actually be looking if this were to break down, below this 59 area, it's got to follow through on a close below 53. You follow through on a close below 53, I'd be using the 44.90 as a target. Good question, though. Do I anticipate a stagflation type recession? I think this could get into a longer recession than anybody thinks. Now, it all depends if they want to try to come in with stimulus again, which would stoke inflation. And when I say inflation sticky, I'm not talking about these inflation expectations of 5%. I mean, inflation, if we have a recession, inflation sticky at like even 2.5 is really brutal if you're in a drawn-out recession. Now, there will be things that get deflationary if we're in a drawn-out recession. However, what I'm more worried about, and we'll have to see how this unfolds, but if some necessities like food stays sticky with inflation, because that's something people have to buy. So, J1 SMCI, thank you, Sterling. SMCI. Technically, this is a lopsided double. No, it's not. Sorry. By the way, I'm not bullish on SMCI at all. I'm watching for rollover plays on this and to complete the. I mean, we already checked off the 87.5, but I'm still watching for rollover plays on this. Now, it's going to probably trade in sympathy with NVIDIA today. So if NVIDIA beats, you could see stuff. It's got to close. If you're looking for a turnaround play in SMCI, which this, I don't buy their books. I still don't buy it. They had a board member sign off on it, a special investigation of one. This really has to get above $70. So on any buy target, $70 would be a first key target for me. There's not a great pattern here. I thought this was a lopsided double. It is not. So right there, there's your weekly. On your daily, it couldn't hold key breakout support. Yeah, it came back to the bottom rotation zone. It's gapping up today based off of, again, you got the stuff with NVIDIA. We're buying this usual thing and counting on NVIDIA earnings. It's a gamble play for me. This would be a gamble play. I like the setups that are easy. Like this, hey, you buy this, NVIDIA beats, you could see, easily back above 63 tomorrow. You buy this, NVIDIA misses, you could see it back below 40. So I can't rely, there's no probabilities here. I'm relying on NVIDIA. And NVIDIA doesn't just have to beat, their guidance has to be very strong. Because remember, NVIDIA is still, P to E is 51. So it's not cheap. Could it beat and pop up still and hold in this bigger consolidation pattern? Yes. But look, we've lost the weekly rotation zone. It's starting to make more of a rollover top. At some point, this will make a stronger breakdown pattern. Do I know if it's this earnings? No, I don't. So that's why I like to do setups that favor me. I don't need to trade anything. Like this, again, is a gamble. If you already own it, I know where your stock is. If you're looking to get in it today, it's a gamble. All right. Let's glance at the open. So little sell-off. Let's see where the tick opened. The tick, very flat opening in the tick. So the tick's giving us no bias. Very flat opening, and it's been sold. Now, on any bounce, the S&P's got to sustain above 59.90. And then for first bull play for me to sustain above that, and then key resistance is still at 6,002, 6,003. Again, these markets have not been able to sustain anything yet. So, going to be watching on any rollover play. Key to me is 58.35 at the open. We break below there. This is where I'll start. And why is that very key? You have a prior top right around there. You have a support base here. You have a support base here. You have the support base right here. And you have the that's what's going to be key on a bigger breakdown pattern right there. How do we get, hold on one second. Now, going into the open, let me do this. Since it looks like it's, there we go. So, not on the daily now. Going into the open, I'm looking at this 59.74 area, and then majors is 59.64. We're still getting selling pressure. We are still constantly getting selling pressure. So the constant buying pressure is definitely turned into selling pressure. All right, with that, I shall talk to everyone tomorrow morning. Remember GDP, PCE, durable goods, and remember NVIDIA 4:20 Eastern after the close. Talk to everyone later. Bye for now.